Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Thursday, the 23rd of September. Starting off with Cornish Metals, where it looks as though we've had a bear trap gap reversal through the, through the 200-day moving average, bouncing off that line from uptrend line from March, which is a plus, just around 10.4 pence. We had a gap down, which was an exhaustion gap below the 200-day line, but we've filled that, closed the gap, and looking for the upside, if we can close, I suppose, above current levels, 11.65 pence plus, up towards that June resistance line projection as high as 16 pence, maybe by the end of next month. But that gap reversal, the bullish divergence, and the support line rebound, all looking good for Cornish Metals at the moment. On to Amala, which used to be called Big Dish. Here, sort of pizza news, I think, is in the air at the moment, and markets so far responded quite well to that news yesterday, or that announcement yesterday. Here we've broken the 50-day moving average at 0.9 pence, and above that looking for at least the 200-day line just around the 1.2 pence level, and obviously the main resistance there up to 1.4 pence. Obviously, we have had false dawns for the shares on many occasions previously, but we're coming off very oversold territory here, and there might be a little spurt up towards 1.2, 1.4 pence as a best case scenario over the next couple of weeks while we hold above 0.9. Holding above 0.9, pretty important. On to one of the more famous names on the stock market, Fincap, and a situation here which is sort of an echo of what we saw at Cornish Metals, i.e. a bear trap just below the 200-day moving average. In this case, it's around 32.5 pence, and we've gapped up as a bear trap gap reversal. Also good bullish divergence there in the RSI window as well. So that points to the shares having a little run to the upside and breaking out of that negative flow that we've had in recent months. I suppose what we're looking for here is a decent close above 35 pence, and that April resistance line, if we can get that, then it's back towards the low 40s, perhaps post-May resistance for the share. Stop loss back below 31 pence at the moment. Moving along to another stock which is looking encouraging at the moment, Gemfields. Here we've had I suppose a very strong rebound for the shares, either sideways or up since the lows back last summer, around, what's that, sort of 6 pence, something like that, 5.5. Rising trend channel from the early part of last year, that's heading towards 22 pence, and we've gapped through resistance at 13.5, so above 13.5, looking for 22 perhaps by the end of November as a momentum play. On to Galileo, which had a good day so far. We already broke that resistance line there from May, and the 50-day moving average at 1.2 pence. Above that, we were looking for the 200-day line at 1.5, and perhaps up towards the top of that gap there from back at the end of May at 1.6, 1.7 pence over the next 2 to 4 weeks, while we hold above the 50-day line at 1.2 pence. Itaconix, requested stock. Somebody's talking about the 50-day moving average and all that sort of stuff. But in fact, what I like about this chart, apart from the bounce off the January support line there at 5.75 pence, is this U-shaped reversal that we've had since July, and that sort of hook above the 50 and 200-day moving averages, above 7.8, which is the 200-day line. Looking for the shares to get back to resistance on the way down, maybe 12, 13 pence by the end of next month, while we hold above 7.8 pence. On to Kibo, which has been certainly a problem child, both fundamentally and on a technical basis. But we had one sort of trigger there for a potential rally back in June, and I suppose it was a sort of 2-day wonder, and then we came back again. Now also broken a line of resistance on this occasion from April, and above the I suppose the 50-day line at 0.22, looking for potential return towards the 0.3 zone, which I think could be achieved if we hold the gap higher that we've had so far today. Nsci, a favourite of the roasters, or at least one of the roasters, maybe two. Here we've got a situation where the shares have been finding support towards the £1 to £1.10 level. Current situation is that looks as though we're going to have a bit of price action above the 50-day moving average at 116, and above that looking for £1.35, which was last month's resistance for the shares. So maybe a little run up for the stock over the next week or two. I've had another requested stock, which I've taken a long time to get around to. Parkmead, I believe it's a gas play, but don't quote me on that. Here the situation is that we've got this rising trend channel. I suppose we broke out of it at least for a while, but I suppose more like a broadening triangle actually. But here we've got a situation where above recent support at 50 pence or 49 pence and above the 50-day line at 48. Looking for further upside, more of a breakout, and that could be up towards as high as 80 pence, maybe even 85 pence by November at some point, if we the longer we hold above the 48 to 50 pence support area for the shares. Quiz is next, and here we've had a solid run for the stock, actually hitting the target that we had there at 28 pence. Not quite sure where that came from actually, but here we've got a situation where, looking back a bit more, you can see that resistance line target there from the beginning of 2020. And I suppose that the thing to do now is to try and find out where the next level to the upside might be. At this stage, probably the best guess is that we'll hit that line of resistance there from back in August 2020 up towards 32 pence as a best case scenario target over the near term, and that's valid while we hold above the support of today at 22.8. So above 22.8, looking for 30 after the double gaps or triple gaps actually that we've had to the upside so far in September. So looking pretty buoyant there for Quiz at the moment. Rainbow Rare Earths, I think I interviewed the company a few days ago. It's also had other coverage on Vox, I think even today, from John Mayer. Current situation is that we've broken out of that falling wedge that we had there. I suppose you could argue that the wedge is actually like that, but either way, we've broken out and above 12.5 pence. Looking towards filling that gap eventually over the next month or two up towards 18, 19 pence, but an initial target above 15 at 15 pence rather, 16 pence from post-June resistance would, I'm sure, please the bulls at the moment. So above 12.5, looking for 16 on Rainbow Rare Earths in the near term. The prize for one of the most difficult stocks to chart on the market has to go to Vela, and even though it is very difficult, one keeps on trying. The reason for inclusion today is it looks like as though we bounced off that broken November support line, rather resistance line there at 0.07. Above that, a partial or full retest of the main resistance here up to 1.2 is the potential target over the next 4 to 6 weeks. But the excitement here from a technical basis is the bounce off that broken resistance line there at 0.07 for the shares. That's it from me today. More updates tomorrow.